Welcome back. We are expecting a bounce back in stocks today. Markets coming off of a rough session yesterday. The volatility so far this year taking a serious toll on the IPO market. The first quarter saw the fewest IPOs since 2009. But my next guest says we should start seeing things pick up soon. Joining us right now, our friend Kathleen Smith, founder of Renaissance Capital. Kathy, it was great to see you.
Thank you.
Thank you so much for joining us. So IPOs squat in the first quarter. Really a tough period. To what do you attribute that?
Well, we've been in a big winter freeze. We've never seen it. You have to go back to 08, 09 to see this kind of a shutdown. And a lot of it has to do with the overall market volatility. And when investors are afraid, they tend to hide in the very large cap, safe places they tend to get away from and sell down these growth companies, which are really the bread and butter of the IPO market. So, yes, it was bad news. The market has stabilized since about February 11th, I think, was the bottom. And from there, we're seeing some very strong performance of the companies that have already gone public. We have an index that tracks the last couple of years' worth of IPOs.
Yeah, we're looking at it, the Renaissance IPO ETF.
Yes, and while it's still down for the year, the outperformance has been very good. That's a sign that positive things are happening.
So the Wall Street Journal is reporting today about the coming IPO of First Hawaiian Bank. I think that says two things. One, does that tell us something about how few dynamic companies there are out there that a Hawaiian bank is?
Oh, you don't like First Hawaiian Bank, John?
And also, does it say anything about financial stocks? Are we going to see more financial IPOs?
Well, I think First Hawaiian Bank is because everyone wants to live in Hawaii.
There you go.
But we are seeing one of the first icebreakers that we would call it, because out of this, as the market has stabilized and the returns have become better, the first IPO we're going to see priced next week is BATS. And that's a solid...
The exchange, yeah.
Yes, the exchange stands for Better Alternative Trading System. And that's a significant company, and we expect to see significant companies with good valuations now. It's not going to be just any company. And that's a company with almost $2 billion in revenue. It's become the second largest U.S. trading exchange.
They tried to IPO 4 years ago.
And that is a very interesting point. They did try to IPO, and they're going to try to IPO again on their own exchange. Now, it didn't. They fell on
What's the symbol? BATS?
BATS.
Okay, great.
That's global. The point is, since they tried and failed 4 years ago on their own exchange.
Because their own technology failed 4 years ago. Right.
So our bet would be they're going to make it work this time.
Of the, if you look at it industry-wide, which sector is the least appetizing right now in terms of IPOs? Which type of companies would have the hardest time going public?
And which might be easiest?
Well, the unicorns are the biggest challenge that we have, or those companies that have had the business model of growth at all costs. They're not earning money, and investors are, when they're cautious, they're going to look for the most solid business models, not a model that says top-line growth only. And they're going to look for attractive valuations, and there has been a valuation disconnect in the private market with those numbers versus what the public is willing to pay.
Would you put Uber in that category? I mean, that's like the quintessential unicorn, right?
Uber may be able to defy that formula, but many of the others won't. And
like,
it's still,
like what companies, Kathleen?
Well, we're going to look at Airbnb, there's Snapchat, there's Pinterest. There's so many of them. They're very good headline companies, but they need to have a bottom line. And one of the problems with looking at this whole set of private companies is there's not a prospectus, so we're kind of guessing what that bottom line, if they have one, looks like. But there is a disconnect, and that's going to be very painful for startup companies. The pain is already being felt because they can't monetize, and the venture community is not in business to hold these stocks forever.
Well, that tells me that investors are becoming, you know, a little more value conscious and recognizing that, you know, just because it's this private company that everyone's talking about, this unicorn that's
I think Twitter
not do well.
And Twitter has shown a light.
Gotta be, yeah.
Because of the lack of the ability to monetize.
It flies in the face of this idea that there's a bubble in our stock market if investors are being so discriminating and IPOs are so slow to get off the start.
We might argue the bubble sits in the private equity venture capital market.
That's where the bubble is, not the public market.
The public markets become very, and maybe because we've had some lessons learned through 08, 09, we got through the dot-com bubble. The public's been very cautious and has corrected valuations right now. We haven't seen that in the private market.
All right, well, we'll be watching BATS Global for an indication of what's happening next in the IPO market. Thanks so much, Kathleen.
Thank you.
Good to see you, as always. Kathleen Smith, Renaissance Capital.